Welcome to Everything Financial Radio. This is the Legacy Radio Network. I'm your host, Dennis Tubbergen. I'm here every week at this time. If you're a new listener, welcome. Glad you decided to tune in today. I've got a terrific show lined up for you. And if you are a returning listener, welcome back, and thanks for tuning in again. We have Mr. Karl Denninger stopping by today. Actually, I recorded this interview with Karl before the fiscal cliff deal was reached this past week, so I think you'll find his perspective very interesting. Also, on next week's program, you're going to want to mark your calendars and tune in. Mr. Harry Dent, best-selling business author, will be joining us. We'll get his take on how the fiscal cliff deal will affect the markets and your money. So, again, you'll want to be sure to stay tuned for that. Next week, Richard Russell, the newsletter publisher who has published his Dow Theory newsletter, I believe, longer than any individual. He's been publishing it since 1958. This past week came out and had some very interesting thoughts on how this huge national debt of the United States will be dealt with. He said that we are living through the greatest bubble in world history, and certainly that outcome, the outcome of that bubble cannot be positive, so we're going to get Mr. Russell's take on things. Also, I'll be talking on today's program a bit about our new class. It's called Retirement's New Rules in the New Economy. You can go to personallegacyseminars.com and get some information, or you can attend one of our discovery groups. Those are starting up again. All details are available at personallegacyseminars.com. Also, we'll be talking about the fiscal cliff deal. You know, the stated goals of the collective group of politicians going into these negotiations was to avoid a tax increase on all but the wealthiest Americans, to reduce the deficit, and to avoid kicking the can down the road again. They accomplished none of the three. Every working American will be seeing a tax increase this year. In fact, if you make $50,000 a year, your taxes are going to go up about $1,000 a year. And we've got another political showdown coming up here in a couple months over the debt ceiling. We'll talk about that as well. Also, an article in The Independent talked about the race to the bottom. We're repeating a lot of the same mistakes from a policy perspective worldwide that we did in the 1930s. We seem to have the United States and Japan and other central banks of the world engaging in money printing in an effort to devalue each of their own respective currencies more quickly than other countries can devalue their currencies. We'll talk about that and what it might mean for you and your money as well. If you are not able to tune in to one of our programs, you can go to the iTunes store. You can just search under Everything Financial Radio, and all our programs are available there for download. So you can listen to them as you would like. You're also welcome to go to everythingfinancialradio.com, where our shows are posted every week. You can simply click on the Listen to Past Shows link and select any of the shows or any of the interviews with our guest experts there as well. I'm pleased to have back on the program today Mr. Karl Denninger. Karl is a prolific blogger, economic commentator, and frequent guest here on the Everything Financial Radio Show. And, Karl, glad to have you back today.
Thank you for having me.
Karl, just finished a holiday season. Sounds like retailers maybe didn't do quite as well as they'd hoped. Can you fill us in?
Sure. Every year we go through this nonsense that comes right after Black Friday, where the National Retail Federation and Shopper Track come out with these projections that we're going to see, 8, 10, 6% increases in sales coming into Christmas. And this is kind of like asking a retailer of cars whether or not it's a bad time to buy a car. You go to a car dealer and say, well, should I buy a car now? Of course, the answer is always yes. Same thing if you go ask a realtor whether you should buy a house. The truth, of course, comes from the register data, and MasterCard and Visa have real-time access to this transaction stream because they process the vast majority of all of the transactions that go through the system in one form or another, whether they be debits or credits. And what they came out with over the holiday was that total spend was only up 0.7% over last year. Now, what we do know is that online shopping has advanced dramatically, but we had a report out a couple of weeks weeks back that said that same-store sales and that Department of Commerce retail numbers were very good and were very positive. So somebody's obviously not telling the truth, but the data that is the closest to the source and the most real time is the one that you want to trust, and that is the MasterCard data, which says that from a standpoint of brick and mortar and actual retail operations, when you look at it in inflation-adjusted numbers, retail sales were actually down on a unit-moved basis. And when you look at it in terms of online shopping, retail sales were way down. So this was Grinchmas, not Christmas.
Karl, let's shift gears a minute, because when we take a look at holiday shopping, certainly that's a reflection on the economy. We are obviously very concerned about the economy, and Washington seems to be making a big game out of what's coming here, or what has come, the fiscal cliff. And we're recording this about a week or so before the interview will air. But it certainly seems to me, Karl, that this is just more political games when you're talking about the amount of taxes we could raise on folks making more than $250,000 a year. The numbers I've read, about $40 billion in the whole scheme of a $1.2 trillion deficit. That's really chump change. Is this just political games, or is something meaningful going to come with this? How's this going to play out?
It's absolute nonsense. The problem we have in this country is that ever since Bush came into office and started running $600 billion a year annual deficits, which of course was done back in 9/11, and the claim that we had to massively beef up defense, the government and the people have become addicted to the idea that we can create false demand in the economy by spending more money than we have. This is very similar to what you could do short term as a person. If you lost your job, you just get out your credit card, spend like you didn't lose your job. Until it works right up until the bank calls and says, excuse me, how are you going to pay that bill? We as a nation can get away with this for longer than you as a person can get away with it, just because the nation is bigger and it has more ability to tap other people. But eventually this ability runs out. And what we are facing now is the fact that the government and its actors, that is Congress people, senators, and our president, do not want to come to the American public and say we lied to you for the last 3 decades. We promised you that you could have your Medicare, your Medicaid, your Social Security, all of these other entitlement programs, along with all of this other spending that we do, and you would not have to pay higher taxes, much higher taxes, double what you're paying now in order to fund it. That is a lie, but that is what has been sold to the American people. The best thing that could happen economically for this country is for us to go off the fiscal cliff, because if we do that, about half the deficit will go away. $200 and some billion of it from the payroll tax cut, which should never have been passed all by itself. The payroll tax cut destabilizes Social Security and brings its death date when it is forced by law to start cutting benefits by about 30% from 2039 up to about 2018, 2019, which is just a few years away. This nonsense must end, and yet there is no credible path forward by either Democrats or Republicans on the table right now to do anything constructive about it.
Karl, we have just maybe 3 minutes or so left in this segment. I noticed that you have a new book out called Leverage, How Cheap Money Will Destroy the World. Share with the listeners a bit about the content of that book and what really motivated you to write the book.
Well, Leverage was published last year. And it was really the motivating factor was people kept telling me, you need to condense what you write on a daily basis into something that can be passed around the coffee table, so to speak, and understood without having to follow you every day. Because a lot of people in America just simply won't take the time to devote the sort of effort that's necessary to follow something on a daily and ongoing basis. So Leverage was an attempt to condense down into a reasonably easily readable format, a history of how we ended up in the mess we're in today economically, and then some policy prescriptions, because it is no good to sit there and complain about how terrible things are or how bad they're going to get if you can't offer any kind of a solution. And so what Leverage attempts to do is take a look at the world as it exists, how we got here, and then put forward some paths that actually could resolve this, not without short-term pain, because there's no way to avoid what is coming in the short term, but rather is how do we balance out our economy and get back to the place where the rule of law matters, where individual industrialism matters, where people's the willingness and ability to innovate and become creative and productive members of society matters, and where our economy is in balance between what we demand from our government and what we're willing to pay for.
Well, we are chatting with Mr. Karl Denninger. Karl's blog can be read, I think, multiple times a day from what I've seen, Karl. The website is market-ticker.org, market-ticker.org. I would encourage you to go check that out. Karl, when we come back, I'm going to ask you your take on something that happened here in Michigan. Michigan is now a right-to-work state. And we're also going to get your outlook here for the new year, ask you what you think is going to happen over in Europe. Will we see the markets continue to rally because of the quantitative easing program the Fed has just beefed up? So we'll cover all that with Mr. Karl Denninger when Everything Financial Radio returns here on the Legacy Radio Network. Stay with us.